What's going on, Canopy growth traders and investors? It's Rod with POW Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Today is Saturday, May 31st, last day of the month. Hope you're well, and we'll get ready for a brand new month next week. I'm going to be traveling to the mountains this weekend, so I'm going to be not as active, and I'll be back on Monday, so I'm not sure if I'll get a video out until Tuesday. But in this video, we're going to review Canopy Growth's Q4 2025 and full fiscal year 2025 earnings. Spoiler alert, they were bad. They did miss estimates in terms of revenue and EPS. I did an earnings prep video, and like I said, those numbers, they had a very large miss from, and the stock was down double digits, 20% at the close. AYR also had an absolute bloodbath, down 50%, so the whole sector's still struggling, and I'm going to post a video on that, but essentially they had a cease trade order, delayed financials, did not look good, and yeah, we had weakness in the broader market, so it just wasn't overall good timing. We'll review the chart at the end as well, but like I said, I wasn't expecting much from these earnings, and it was actually a lot worse than I even imagined. So it's probably going to be like a 2027 thing before they're even profitable, and there's probably a lot more pain ahead. I mentioned in my earnings prep video that they were probably going to struggle for a little bit longer because of the fact that they have a new CEO and they're still right-sizing the business, SKU rationalization, and trying to drive efficiencies. So it's probably going to be a little while longer. So I'll go over my thoughts and opinions on it. We'll do a quick overview and a review. And then, like I said, we'll jump into the chart at the end. I'll give my thoughts and opinions on the technicals. But as always, not financial advice. This is for entertainment purposes only. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. I'm going to be using that as my platform of choice going forward. So looking forward to going to the mountains this weekend, going to a bachelor party for a couple nights, doing a lot of golfing. And yeah, it should be fun. But we'll jump right into the numbers. So if you remember from my earnings prep video, I said the average analyst estimate was going to be 70.8 million in terms of revenue, and that's in Canadian. And earnings per share EPS was forecasted at negative 0.457. And we had a huge miss in terms of EPS. We missed by over 209% surprise. So it came in at negative 1.43 EPS Canadian. And their revenue was 65.03 million Canadian, which missed by almost 7.5%. Not good at all. When you see those numbers miss by that much, that's why the stock is down at the close. It was down, 23, almost 24%. Actually, I'm not sure why it says 23% there. Oh, that's the Canadian version, and CGC was down 22%. That's why. So if we just take a look at CGC here on the hourly time frame, we were looking at a descending triangle, and we'll look at this in just a moment, and the chart in more detail in just a moment. But from the low of the close on Thursday, you can see that from the low and the close to the low of the next day was down about 23%. And we could even still see an EMA 12 and 26 bear cross. But this is what you have to expect, right? When we go from 77 cents all the way up to $2 in just a month, you need to expect to pull back to 150, maybe even $1. This is just how the market works, and we are looking at like a potential head and shoulders could be forming here now as well. So again, we'll jump into that in just a moment. We'll review the earnings. I'll go through it pretty quickly here. So this was their fourth quarter and fiscal year 2025, as I mentioned. Their MJ in Canada, their revenue increased 4%, so just by a small margin, year over year, and led by 13% growth in Canadian medical MJ. Reduced total debt by $203 million. We had refined strategy focus and organizational structure expected to accelerate growth in global medical MJ and improve commercial execution in Canada adult use MJ. Additional cost reduction initiatives identified and initiated in the quarter and are expected to deliver at least $20 million in annualized savings over the next 12 to 18 months. So again, this was for the period ending March 31st. So we didn't have April 20th 420 sales on there, and all figures are reported in Canadian dollars unless otherwise stated. So here's a quick summary. Even their adjusted gross margin for the quarter was only 19%. For the year, it was 30%. But yeah, they had a pretty bad quarter. Negative cash flow, adjusted EBITDA, net loss, $221 million. Like I said, there's a lot to pick apart here. It was no sugarcoating it. It was terrible. So I know a lot of people are frustrated, but again, this is why we have to understand that it's still federally illegal in the US. We're still in the pregame warm-up. There's so much growth ahead, it's not even funny. And never invest a lot of money, especially money that you can't afford to lose. There's a reason why Canopy is less than 10% of my overall portfolio. I think it's closer to like 5% of my MJ portfolio in terms of dollar value. And it's just because there's going to be a lot of pain ahead, right? Like I said, they'll be lucky to turn a profit in 2027, in my opinion, while a lot of the other Canadian LPs are already starting to turn a profit. And Acreage was pretty terrible performance. Claiborne, their infused pre-rolls launched in the quarter ended December 31st. Have ascended to number 2 market share in infused pre-roll category in Alberta, number 3 in Ontario, and number 3 nationally. But they also had a lawsuit that pertained to that as well in some of their claims. International market. So this was something that stood out to me. I was expecting some good numbers here, but their market net revenue was $8 million, and that represented a decrease of 35% over the quarter prior in the prior year, primarily due to declines in Poland medical MJ sales caused by regulatory challenges that negatively impacted the overall medical MJ market in Poland. And we'll have to keep an eye on that for like Tilray and Curaleaf because they operate there as well. And same thing with Australia. They saw a decline in Australia medical MJ sales and transition of our US CBD business to Canopy USA, which was deconsolidated on April 30th. Performance in the German medical MJ market in Q4 of 2025 benefited from expansion of the product portfolio available to patients, however. Storz & Bickel, this was an interesting one as well, delivered net revenue in the quarter of $17 million, representing a 23% decrease compared to Q4 of last year, driven by softer consumer demand for all devices and strong revenue generated in the first full quarter of Venti sales that occurred in Q4 2024. So again, I'm not going to read everything in its entirety. You probably already went through it, but we'll just go through some of the other highlights here. So in terms of the exact numbers, their total current assets, $294 million, total liabilities, $430 million. So again, not great whenever you see that. They got, like I said, reduction in their debt, which was good. They saw a total debt reduction of $293 million, which was 49% in the calendar year, in the fiscal year. So that did strengthen the balance sheet a little bit. Excise tax for the quarter, for the 3 months ended, was $12.953 million, and gross revenue $77.984 million. Basic and diluted loss per share, you can see here, negative 143. Cash and cash equivalents at the end of the period was $113.811 million. So not sitting on a boatload of cash by any means, but yeah, those margins, those need to come up for sure. 19%. Ugh. Never like to see that. So that was pretty much my overall review. Their Canadian medical MJ growth, so they had 13% year over year, as I mentioned. They did have some cost savings, but like I said, they're trying to right size it and drive efficiencies, right, and improve margins. Their adjusted EBITDA was reduced, the loss by 39% and 60% compared to fiscal year 2025 to the prior year. And yeah, let me just go through some of my other notes here. See if there's anything else. They launched the Volcano Classic 25 Years Edition and plans a new device in fiscal year 2026 to broaden consumer access. That's pretty much it, though. Storz & Bickel declined 23% due to softer consumer demand and tough comparisons with the prior Venti sales. And then Canopy USA challenges, so significant decline in their fair value of Canopy USA investments driven by Acreage underperformance, 25% revenue decline, 57% gross profit decline, and its default on a credit arrangement, an agreement. So macroeconomic uncertainty as well. They had ongoing global macroeconomic challenges. So overall, not a great quarter. And like I said, it's probably going to be. And I was talking in the Power Group private community with I think it was Jam, and he mentioned he was in at 124 for a swing trade, and ended up taking profits leading into those earnings, and ended up being a fantastic trade, and now able to reload a lot cheaper. But if you're holding for the long term, you're not too worried. In the last week or so, we're down from the high of $1.99. We're down about 34%. So and we could still see an EMA 12 and 26. Bear cross at this point. So you have to understand, are you in for a trade, or are you in for the long term, and not risking too much, like not breaking the bank, not putting in your life savings, right? We could see even a head and shoulders, and if we saw this head and shoulders confirm, we'd still need to form the right shoulder, so it's still very premature, but we'd be right back down under $1. So we'll keep an eye out on that. We did have that hourly descending triangle, and I mentioned that we hadn't been hourly oversold since all the way back in beginning of April. And after such a big move, I said, hourly oversold should be in the cards, in my opinion. And that might be a nice area to enter for a swing trade or for a quick trade. And here we are. We're very oversold. We're well below 30. We're into the 22s on the RSI here on the hourly time frame. So when we start the hourly bounce, it's going to be a potential for an hourly bear flag. So what we'll do is we'll just draw this out, and we'll get rid of this head and shoulders so everything's not super convoluted here on the chart. So as you can see, if we were to bounce on the hourly time frame, start the hourly oversold bounce, anything under $1.49 would be an hourly lower high and bear flag. So that's going to be key resistance if we do start the hourly bounce here and hold key support at 131. And then we could be looking at a measured move down to around $1.08. So it's not looking too good at the moment. If we continue to drop from here, then we'll just adjust the Fibonacci, the Fib tool accordingly. But we'll see if that's going to be the most important support here in the short term. It's actually a triple bottom at 131. Lose 131, and we could be back down into that dollar mark in a hurry. But like I said, the whole sector was still bearish. AYR was down 50% at the close. You never like to see that. I mentioned be very, very careful on this name. And from the high of Thursday to the low of the day on Friday, let's just take a look at this absolute bloodbath. It was down almost 53.5%. Wow. So again, the whole sector was bearish. We had Cresco down almost 10%. They finally reported their earnings as well. So overall, still very, very bearish. I mentioned that we might come back and backtest the 10-week moving average there at $1.30. It's pretty much played out to a T. And in terms of the daily moving averages, I said we had the 50-day there at 128, and we're getting very close to it now. So we could see a bounce, like I said, an hourly oversold bounce at some point soon, and it's probably going to be a decent one, in my opinion, just based on the lack of resistance that we have. But if we did start the hourly bounce just to the current price to EMA 12, you're looking at about 11% bounce, and to EMA 26, about a 20% bounce. But like I said, key resistance to get above is going to be that 0.32 fib if we just take our tool. And let's say we do start the hourly bounce on Monday, then and hold 131, then like I said, that 150, 149 area is going to be key resistance to get back above to negate that hourly bear flag. I didn't actually join the conference call, and nobody really, I don't think one person asked me to stream it live, and I did ask if people wanted to see that. So I didn't bother, and I didn't join the call either. After I seen the earnings, I was like, oh, I don't really need to be told anything else. I can we'll just wait for another 2 or 3 quarters, because I don't think there's going to be anything to see here, folks. This is a long-term play. Again, I'm not super bullish on the business long term. You know, they got a lot of work to do. I think this is going to be a 2027 story before they turn any major metrics in terms of profitability. And like I said, there's a reason why it's only about 5% of my portfolio, and I've been adding it, as of the last year or so. So the prices has been, down about 98% from all-time highs. So I don't mind adding that low, but again, it's just a very small position. I'm diversified into, about a dozen stocks in the MJ space, and then well outside, right? I own more crypto than I do MJ by a lot. Like my largest crypto holding, I own probably like 10 cryptos, and my number one crypto holding is worth more than my entire crypto portfolio. Or so my number one crypto holding is worth more than my entire MJ portfolio combined, right? And then I have my other like 9 cryptos. So I have a lot more money in crypto, and as crypto looks to top out here, it could happen, like I said, over the next quarter or two. I'm going to be rotating more of those profits into more beaten down MJ. It's not going to be all of it. It's only going to be like 10 or 20% of those crypto profits into more beaten down MJ, right? So you have to call it as it is. And yeah, I was screaming from the rooftop that it's going to be a while before we see any major improvements here on Canopy. Same thing with AYR. I was saying be very, very cautious with that one. And look what happened on Friday yesterday. So let me know your thoughts and opinions on this. If you joined the conference call, let me know if there's anything that stood out to you, any major takeaways. But going in it there, it's Rod with Pow Group. Thanks again for joining us in the pursuit of wealth. Hope you have a fantastic weekend, and we'll see you again on the next update.